Hello, and welcome to this week's Motor Trade Radio podcast. Powered by Motors and Cazoo, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters from across the franchised and independent dealer sectors.
Well, you know what, Phil, I think as we record this, as we go out on Saturday morning, I think there's going to be some tired-looking people getting off planes coming back from Las Vegas, don't you think?
Yeah. I mean, they've had a whole week of it over there. I think they've been hit with some adverse weather conditions as well, from what I'm understand, and that happened quite badly last year, didn't it? I think they all got quite caught out with heavy snow. Neither last year,
Yeah.
but no, we've seen a lot of snippets come out this year.
We have indeed, yeah. So the event ran from Tuesday to Friday. It's mega annual event, which does attract a lot of UK dealers and suppliers. And it really has gathered momentum over the years. Vegas is certainly one of the
It is, isn't it?
it's one of the most popular ones.
Yes.
We used to take a delegation out there every year with ASE and Trevor Jones back in the day,
Yeah.
and Vegas was always the one where it was pretty much a plane load of dealers going out there. And the great thing is that they have an international lounge, and it was like you would see everyone from the UK dealer sector in the international lounge, because that was the place where you could sit down, which was absolutely key at NADA. You do a lot of walking and enjoy a free coffee and muffin and chat with like-minded souls from the UK.
And that was interesting, wasn't it? I mean, and you talk about suppliers and going over, as well as some of our key guests that we've had on over the years on the podcast. But one of our recent suppliers with Impel, wasn't it, with James Lees and Matt from Impel. Yeah. And I know you were talking with James Lees because he predominantly looks after UK and Ireland in terms of Impel's growth and market entrance. But you did suggest to him that he should spend his time in that international lounge, because that's where most of his potential clients are going to be.
That's where everyone is. That's where all the deals are done, and definitely worth being there. You could actually spend most of your time in there rather than sort of traipsing up and down the halls.
Yeah, and it's great. I mean, you just love watching some of the the social stuff that's coming out of there, and stories coming out of what they're picking up whilst they're over there. And I'm sure that, as you say, when they arrive back in the UK Friday, Saturday, it's predominantly probably going to be Saturday as you say, as we go live. That's when they'll start to get their head around what they've seen and heard and who they've met over there, and start to try and make sense of it in terms of what that means for them here in the UK.
Yeah, I mean, I was always impressed by the delegates that I met out there, because, there's an element of working hard and playing hard, but a lot of the dealers would go back with clearly defined action plans. These are the things that they've learnt at NADA, at the convention itself, the speaker sessions, and they would formalise that into an action plan when they got back to the dealership, so they'd hit the ground running.
Yeah, no, I think you're right. I think that you used to go, didn't you, with the NFDA and ASE back in the day, and they still go out there. But there is, people think, you've experienced this as well. I mean, those observing from afar sometimes think it's a bit of a jolly, don't they? But you've done it. You've walked them. You've walked them floors, and you do put the steps in, don't you?
You do literally walk miles upon miles, because the convention centre, it's each hall is the size of the Birmingham NEC, so you can walk long distances.
Yeah, so we'll keep. We'll obviously probably start to pick up some of the feedback and what people have seen of what they expect to either come over from the US into the UK, or what the dealers are feeding back in due course. But we've also got, we're hoping next week, we've got a new guest coming onto the podcast next week with an interview and an update from say, a prominent motor trade veteran. I'm not sure whether they'll thank us for that or not, but we'll find out when we do get to that interview. So we're looking forward to this one.
Yeah, you know what? I think they would probably describe themselves as a veteran rather than an influencer, don't you?
Yeah, I would say so without giving too much away. But I'm sure we'll ask them when we do get that interview. But as you say there, keep an eye on your podcast feed. I'm very confident that the interview will be of insight and interest to you, and it'll be very topical in what we are planning to discuss on that podcast, and that'll be on your podcast feed midweek next week. So to keep tune there.
You're listening to All the Chatter That Matters on the Motor Trade Radio podcast, powered by Motors and Cazoo. If you're a supplier and would like us to profile your business and reach our audience of dealer group bosses, managers and decision makers on one of our supplier special episodes, then get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Companies already featured on our supplier specials include Prospecting Dynamics, iVendi, ETT, Generational, Tracker, MTC, and Jigcar. And you can find them all on your podcast feed. And if you'd like us to profile your business, then just message Philip or myself.
You're listening to All the Chatter That Matters on the Motor Trade Radio podcast, powered by Motors and Cazoo.
Headlines this week, and we've got quite a few, Phil, so strap in for this. They come from Car Dealer, Motor Trade News, Motor Trader, AM, Autocar, and Auto Express, starting with our full lowdown on January's new car market. And spoiler alert, registrations were up, but EV sales were static, with year-on-year share actually down. Phil's got the sales figures from key European markets, and we'll take a look at van registrations, which dipped once again in January. Staying with new EV sales, we'll take a look at a new Brego report on the negative impact of OEM EV discounting over the course of 2025. Vertu Motors has closed 2 dealerships following a strategic review. And we'll finish off the show with an update on Chinese car maker Chery and its plans to build vehicles in the UK at JLR plants, launch another new brand, and open a new commercial vehicle HQ in Liverpool. So plenty happening there from Chery.
Yeah. I mean, it just shows that intent. But we'll get to that at the end of today's show. But as Curtis said there, in the new car figures and for cars and LCV have been announced this week. But the story was covered in Car Dealer, as well as obviously the direct media release from the SMMT, and this is that January new car registration soared by 3.4%, but EV uptake sparks alarm. And this is that January saw a strong start to the year with its obviously new car registrations, best start to the year since 2020. The best selling car was the Kia Sportage, followed by the JQ7 and then the Ford Puma. But the SMMT have raised concern over the EV uptake as January figures way short of obviously the ZEV mandate targets for 2026. So lots to get your head around in this one, Curtis.
Yeah, definitely. And really good story in Car Dealer from James Batchelor. And starting off with new car registrations, as you say, increased 3.4% in January, but very much alarm bells sounding over the stalling EV uptake. Now, these latest figures from the SMMT show that 144,000 cars were registered over the course of the month, which that's, as I say, is a 3.4% year-on-year increase, and represented the best start to a year since pre-pandemic levels. Now, all buyer types saw growth. So private retail was up 4.5%, Fleets were up 1.6%, and those lower volume business sales were actually up 46.5%. So it's actually quite unusual to see all three sectors up. So very much a positive sign. And fleets continue to dominate new car registrations, holding a 61.2% share of the market, which I think that must be pretty much a record, because it's not that long ago that the market was fairly evenly balanced between retail and fleet. But over 60% of all new registrations went into the fleet sector.
Yeah, no, and I think that's the message that has gone out a little bit today, that yes, a very, very marginal shift there, 0.4% year on year for that private registration share, but fleet still, as you say there, Curtis, still, although a slight drop in market share, although volumes did increase, but still dominating, like you say, with over 60%. But it is really the fuel type, isn't it? And in this month's figures that really, as Mike Hawes from the SMMT has called out there, we're walking into 2026 with a 33% ZEV mandate target, but it's on the first month of the year where BEV actual market share has declined year on year, although volumes did marginally rise, and I say marginally at 0.1% increase in registrations of battery electric vehicles from 29,634 down to 29,654. The market share dropped from 21.3% to 20.6%. So marginal increase in volume, but drop of market share.
Yeah, and it just illustrates what uphill struggle it's going to be this year to achieve anywhere near 33%. So a third of all new cars by the end of the year need to be EVs, and as you say, we're nowhere near that at the moment. And we will look at EV sales for last year in a story that's coming up in a minute. But just staying with these new car registrations, plug-in hybrids actually led the market growth. That they were actually up 47.3% to account for a 13% share of all registrations. So a big improvement there for plug-in hybrids. Normal hybrids were up 4.8%, while petrol and diesel both fell 1.9% and 8.8% respectively. So no surprise there, but some real headway being made there by plug-in hybrids.
Yeah, and you do wonder. I mean, obviously, a lot of the rhetoric now coming out with those plug-in hybrids being that focus from not just the more traditional manufacturers, but some of those new entrants, particularly from China, as those plug-in hybrids being that dominant focus for them as they take market share, and that's shown obviously in the first figures that we've seen now for January with that plug-in volume. But more interestingly, and I know you like your top 10, Curtis, but you look at that mix of model lineup in that top 10, that's getting quite interesting now.
It is, isn't it? Because you already highlighted that the biggest seller for the month was the Kia Sportage. That was on 4,675 units, but closely followed by the JQ 7, which was on 4,059 units. And bearing in mind that car, it hasn't been on sale that long in the UK. I mean, it's probably just over 12 months, maybe a little bit longer, but for a new car from a brand new brand outperforming the Ford Puma, which was in third place on 3,715 units.
And as you say, I mean, we just touched on obviously the Chinese brands, and we'll get onto the story at the end there, but straight away in that top 10 for the month of January, you got, as you say, Curtis, there with JQ in second place. You got BYD in sixth place with the CLU taking sixth position there with just over 2,500. And if we are incorporating MG into those Chinese manufacturers, MG there with the MG HS with just over 2,000 units in January, taking that 10th position there. So, kind of that dominance from what was the Vauxhall, VW, Ford, Nissan days is really getting it mixed up in the first month of the new year, Curtis.
Yeah, it's all to play for, isn't it? I mean, I wouldn't like to put money on the top tens from month to month because we see such a turnover, such a sort of some models come in, some drop out. Some of the big names really drop down. I mean, you mentioned Volkswagen, so the Golf is actually the ninth bestseller, which normally you'd see that up in the top three, the top five.
Yeah, so it's definitely shifting. And just before we move on to the light commercial vehicle market, just some numbers from Europe and the market there and the US. US stayed level, very little, if any, change, with 1.1 million registrations there in the month of January. Spain, a marginal lift of 1.1% up to 73,100. Italy, reasonable growth there, at 6.2% increase year on year for January, up to 142,000 registrations there. In Spain, Germany fell 6.6% down to 194,000, and France fell similar at 6.6% down to 107,200. So very mixed bag across them European markets compared to what we saw here in the UK.
And we do have the van registrations, which have literally just come in. So we haven't had much time to pore over these. So we'll work from the SMMT press release. And the headline on the press release really says it all, because its van market dips in January as EV targets get steeper. Now, you mentioned the ZEV target for cars for this year being 33%. Well, for vans, it's 24%. So we'll see how close we got in January. So the key takeaways from the van registrations for the month were light commercial vehicles down 7.8% with 17,500 registrations, and decline driven by slump in pickup demand after fiscal change impacting double cab segment, which is something that we've referred to a number of times over recent months. BEV demand rises to 10.4% share, but significantly below that 24% target.
Yeah, like you say, there's some shifts there in the van market that really reflect the sign of the times, in particularly in that business economy and demand there for the marketplace. So heading over to motor trade news, and this is the EV transition put pressure on car market and forces pre-registration. I think we've touched on that several times on this
Yes,
over the
familiar theme.
Yes, definitely, and this is the as you say there, a report from Brego that EVs accounted for 23.43% of new car registrations, up 19.5% in 2024, but short of government's target. I think that should be 2025. But I think clearly what Brego's report is trying to highlight here is obviously the consequences of the Z mandate and what around that pre-registration, tactical registration activity in the marketplace.
Yeah, it does call out the OEM activity in terms of discounting pre-regs, driving a sharp increase in nearly new EVs entering the used car market. So plenty of dynamics at play there. And their research shows average prices for one-year-old EVs fell by 16.6% year on year, while three-year-old EVs prices declined by 15.3% as cheaper models and pre-registered stock flowed into the used market. And despite concerns that supply could outpace demand, used EVs actually sold faster in 2025, taking 2.5 days less to sell on average than the previous year, according to Brego's data.
Yeah. I mean, it's something that, clearly, I mean, again, we've talked about it several times on the podcast in terms of that days to sell for EV. So once you get that EV and its price point is right, it does tend to sell faster. But I think one thing that is clearly highlighted here from Brego is the number of, nearly new delivery mileage EVs that are entering that marketplace. We're seeing a lot of it, and we're already starting to see delivery mileage 2026 plate products start to hit the marketplace as well for sale as that sort of pressure continues for the manufacturers to try and get that market share up. So I think back to the initial story that we talked about. I mean, Mike Hawes and the SMMT and others are really concerned of what the pressure is going to be on the market for 2026 with that increased target from 28% last year to 33% in 2026 for cars, and what that will do on this tactical incentivized activity into the market.
Yeah, and it gets more and more complicated, doesn't it, as we see new brands coming into the UK and with very, very competitive new car prices, and how that impacts demand in the used sector, and also the level of pre-registration going on. So a lot of dynamics playing out there.
Yeah, and just finally comment in the report from friend of the podcast and friend of ours, Rupert Ponting, who's head of insight and communications there at Brego, saying that the EV transition was the defining force in the UK car market during 2025. What the data shows is that the market is adapting to structural change rather than one under stress. So yeah, very much summing up that marketplace there.
And next headline is from AM Online, and it is Vertu closes 2 dealerships after strategic review. So this is Vertu Motors closing its Honda Bradford and Citroen Macclesfield dealerships after completing a strategic review of both sites. The group said the decision was taken after assessing the financial viability of both locations, and went on to say that no redundancies have been made, with all staff moving to neighbouring Vertu dealerships. So, a good outcome there for the existing staff. And a spokesman for Vertu Motors is quoted in the story as saying, "We have carefully reviewed the financial viability of our Honda Bradford and Citroen Macclesfield dealerships and made the difficult decision to close them." Not a big surprise, this one. I think it's something that had been flagged up, and it just shows that Vertu Motors is running the rule over all its outlets, all its dealerships across the country, especially bearing in mind the amount of growth it's seen in recent years.
No, I think you're right. I mean, I know one of those. I know the Bradford Honda site and location of it, and you can see there, where one, great, in terms of employees that moving them into other Vertu operations. So not seeing any redundancies, and I think very much what we're talking about from the SMMT figures for the car registrations and the LCV registrations, showing that the financial pressure and the need to be strategic in terms of what these operations are returning as a business. Are they right in the right location? Do you need that site there? So really probably, and Robert being a very good friend of the podcast, this wouldn't be taken lightly in his decision as a business to do this. So yeah, I mean it's obviously strategic thinking and really probably well thought out as to what the final result. And just before we move on to the next story, there is in the latest half-term results, Vertu Chief Executive Robert Forrester said that the group had performed well, but warned that it would actively manage the group's portfolio, assessing growth opportunities and the long-term potential of existing businesses, which kind of sums up what that decision and why that decision was made on those operations.
Next headline is from Car Dealer, and it is Pinewood.AI enters talks over £575 million takeover deal as private equity firm lines up potential sale. So this story, which got a lot of coverage over the course of the week, I mean, I personally, I find it fascinating. I really do. So this is all about Pinewood.AI entering talks over a potential takeover deal, which could see the firm bought by private equity firm Apax, and a filing to the London Stock Exchange earlier in the week revealed that the tech company is actually in talks with Apax partners over this potential cash offer of 500 pence per share. Now, I did a little digging around on this so I
This
mean,
going to explain why Bill's got a smile on his face in the picture.
yeah, Bill Berman, former chief
Oh,
executive
yeah,
of
yeah.
Pendragon, now the Bill Berman, the chief exec of Pinewood AI. Yeah, he does seem rather happy in the photographs that have been taken of him. And just to give a bit of context, a bit of background on this story. So Pinewood AI is the Pinewood business that was previously owned by Pendragon. It was a big part of the business. Now, Pendragon, the retail sites, the basic dealer operations, was sold to US-based Lithia Motors in February 2024. So coming up for 2 years ago now, but they were sold for £397 million. Pinewood, as I said, is valued at around £575 million. So I'm kind of scratching my head there a bit.
Yeah, and I'm sure it'll come out in the wash. I know that Pinewood was a significant part of the Pendragon portfolio, wasn't it, prior to
Yes.
the sale in terms of its revenue and financial, which is obviously why it was, there was the separation of it. And I know Lithia were, and it may have changed, but I know Lithia did have people on the board, didn't they, of Pinewood.
Yeah, I always got the sense, and it possibly explains the difference. I always got the sense in my dealings with Pendragon that Pinewood was kind of the sleeping giant within the business, because it did what it did very, very well. It didn't do a huge amount of publicity, but it provided obviously DMS for the Pendragon group, but also sold it across other AM100s and Motor Trader Top 200 groups. And it was a very, very lucrative business, which is why it made sense as a standalone, as a listed standalone.
Yeah, no, I say. I mean, there could be more on this before you listen to this podcast when we are recording it. This was published late last week. We missed our headlines on last Saturday. So this is it, obviously whatever is going to happen is fairly imminent. Board of Pinewood AI notes that the recent press speculations regarding Pinewood AI and confirms that it has entered into discussions with Apax Partners LLP regarding the possible cash offer of 500 pence per share for the entire issued and to be issued share capital of Pinewood.AI. And I think it has been voted, or that the board is obviously in favour of this, but the deal hasn't been done as we record this podcast.
We'll be back with the rest of the week's headlines after the break.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors and Cazoo. This is your weekly one-stop shop for all the biggest car retailing headlines from across the medium.
Next headline comes from AM, and it is franchise dealers more confident than independents in Q1. So this is based on some research that was carried out by Judge Service at the beginning of, those first couple of weeks of January. It was really after the euphoria of New Year's Day and life got back to normal. They did a bit of research looking at confidence amongst dealers. And this is going to be a piece of ongoing research. And I did actually work with Neil Adley and the team at Judge Service on this. I did see the data, and it's going to provide a fascinating snapshot as we go along, because what dealers were asked was about their level of confidence for Q1 compared with Q4 2025. So when asked to rate their business confidence with compared to that final quarter of last year, 36% of franchise dealers actually said it was higher. 43% said it was unchanged, and 20% said it was lower. And because Judge Service were able to compare and contrast franchise dealers with independents, we've got the independent view, which was a lot more cautious, with 43% saying their business confidence was actually lower than last quarter, while 28% said it was higher, and another 28% said it was unchanged.
Yeah, and I think, as you say, a bit of a compare and contrast again, but from a consumer confidence perspective, that saying that they reported on the consumer confidence among the franchise dealers, 43% said consumer confidence was about the same as last quarter, and 38% said it was higher, and 19% said it was lower. So I think that's fairly optimistic, both from those franchise dealers and the view towards the consumer confidence for Q1.
Yeah, definitely. And Neil Adley, managing director of Judge Service, went on to say that the research for this barometer was conducted in January to provide some insight on confidence levels as the market got back to normal trading. And he goes on to say, despite concerns about EV targets, the results show most franchise dealers are optimistic about their Q1 OEM new car programs aimed at building engagement orders and sales up to and after the March plate change. And he went on to say the views of independent dealers were more nuanced, reflecting seasonal caution as these retailers test the waters with the stock they started the year with.
Yeah, and just finally on this one, and links back to our opening stories from the SMMT January figures, that the majority want the ZEV mandates targets scrapped. Dealers were also asked whether the government should phase out ZEV mandate targets on new cars. And amongst the franchise dealers, 80%, funnily enough, I'm just wondering who the 20% are that said the target should be abandoned. 8% supported them continuing, and 12% were undecided. Interestingly, 8% supported the ZEV mandate target. I wonder if they represent a whole 100% electric franchise. But conversely to that, in terms of the independent dealers, were very much divided, with 43% undecided, 33% saying that the targets should be removed, and the other 24% in favour of them continuing. So a very mixed view towards the scrapping or continuation of the ZEV mandate, particularly with the 33% for cars and 24% for commercial vehicles this year.
Yeah, and it's going to be fascinating, isn't it, as we track through the year, and as that 33% target becomes less and less achievable, I would suggest those figures could well change.
Yes, definitely. So just on a quick story here in motortrader.com, and this is John Clark acquires Barnetts Volkswagen dealerships in Dundee and in St Andrews, and this is this development forms part of Volkswagen Group's Ideal Network Plan, which is a strategic realignment of the brand's UK retail network. And within that, and we were talking just before we recorded, and I'd seen it from Keith Duncan and the East and Western Group, because they were talking about it this week, and it's kind of that reference to that Ideal Network Plan from Volkswagen, that as part of this process, the Specialist Cars Volkswagen dealership in Dundee and Kilcaddy will transfer to East and Western Motor Group, but both the Barnetts Dundee and St Andrew dealerships will rebrand as John Clark's Volkswagen, continuing to operate other as their official Volkswagen franchises. So kind of highlighting this kind of shift that's starting to take place, particularly within that Volkswagen group.
Yeah, definitely. We've already seen a fair bit of activity within the VW network, and we will see more over the course of this year. And just by way of a reminder, the VW Ideal Network Plan, it was announced in September 2024, and it's a 5-year strategic restructuring plan designed to consolidate Volkswagen Group's UK dealer network, which will result in fewer sales locations, and also, crucially, a reduced number of investment partners. But it goes across all the brands, so it includes Volkswagen, Audi, Seat, Cupra, and Skoda, and very much in response to sort of changing market conditions, and also the way that the network grew over recent years, as it took on more sites and more partners. So this is very much a sort of focus on the portfolio and reducing number of outlets, number of partners.
Yeah, I expect that we'll be returning to these kind of headlines over the year as this restructuring or ideal network plan continues to roll out across the Volkswagen Group network. But finally, there's two stories that are kind of linked in both Autocar and Auto Express. But first one in Autocar is that Chery confirms Lepas, don't know if that is pronounced correctly or not, to launch in the UK this year as its fourth brand. And this is obviously the new marque will join Chery, Amoda and JQ as their parent firm targets a big slice of the UK market. So yeah, this is this is just never ending with this brand, though, is it?
Yeah, I think we'll go with Lepas because I think the alternative would be Lepas, which probably isn't such a good brand name. But within this story, they do explain what the branding means, and interestingly, the brand is conceived specifically for the European market. But it's the brand name is basically a mashup of leopard, leap, and passion. Interesting that it's a leopard, leap, and passion, which does tie in with our next story about Jaguar Land Rover.
Yes.
So this will be Chery's fourth UK-bound brand, and will offer a range of what a lot of the Chinese brands are now terming as new energy vehicles, so plug-in hybrids and EVs. And Lepas said it will detail its first UK car in the coming weeks, but Autocar has previously reported it will offer its L4 and L6 crossovers here with combustion, plug-in hybrid and EV powertrains. And both these cars significantly are based on the same modular platform as the Amoda 5, JQ 5 and JQ 7. But it does give Amoda and JQ dealers this additional challenge of introducing another brand, because it's only a matter of 2 or 3 months ago, I think, that Chery was launched as its own standalone brand within a lot of the Amoda JQ dealerships. But now they've got to find space for Lepas as well.
Yeah, I mean, as I say, we talked, didn't we, around naming those 75 brands or whatever, and is it out of date now? It feels like that 74, 75 brands that we were talking about with Robert Forrester, if you remember on that chat with Robert, and pub quiz, try and name them all, changing very quickly, and there's a lot more on the horizon. So again, we'll start to see who adopts this brand is going to be the key, because they're not always, and in our interviews and chats with Steve Young, MD of ICDP and London West, who represents JQ and Amoda, it's not automatic that existing JQ and Amoda dealer retailers get the new brands, be it Lepas or Chery. They are after different network territories, different network partners. So it will be interesting to see, who takes on this brand and where they put this brand within their portfolio of franchises. one that I'll be watching very closely, I think, Curtis, on this one.
Yeah, no, most definitely. And final story for this week, as you say, it is connected, comes from Auto Express, and the headline is Chery confirms new Liverpool HQ as plans for Jaguar Land Rover to build Chinese firms' cars in UK gather pace. Now, a story of two halves, this one. Let's have a look at the Jaguar Land Rover aspect first, because there was a lot of talk, if you recall, Keir Starmer, when he went over to China a week or so ago for the sort of trade mission, there was a lot of talk about a deal being announced between Chery and Jaguar Land Rover to build cars in the UK. And this is all based around spare capacity at JLR plants in the UK. And it does make perfect sense because Jaguar Land Rover and Chery do have this collaboration joint venture in China. So they are used to working together. So it wouldn't be too much of a stretch of the imagination or their existing relationships to use that model in the UK. So it hasn't been announced yet, but I do sense from this story and a lot of the coverage that's been going on this week is that it's pretty close to being announced.
It feels that way, doesn't it? And previously we've highlighted where there's been rumours of the government in talks or supporting the Chinese manufacturers to invest in production in the UK and encourage them to either do a full production plant or an assembly plant here in the UK. And you wonder how much of that is being involved as well to get the support on this. But there's never smoke without fire on this one, is there? So you do feel that this is imminently probably going to be an announcement at some point soon as to that. And I think you made an absolute valid point there. This partnership that they've got over there in China would make sense for them to do something here in the UK.
Yeah, good quote from David Bailey, Professor of Economics at Birmingham Business School, within the story. And he said that such a move reflects a pragmatic attempt to manage risk, improve asset use, and sustain industrial capability during a period of structural change. Going on to say, Chery is already seeing remarkable brand growth in the UK, so having it produce cars here can only be a good thing for production and consumers.
Yeah, so very much lots happening within that Chery space, isn't there?
Yeah, and the other part of this story is Chery opening up a commercial vehicle centre in Liverpool, which when I first saw the headline, I got quite excited because I thought, oh, they're making vans over here as well, but they're not. And it's not actually covered in this story. I think that they were really concentrating on the JLR angle, but the Chery commercial vehicle centre site, it'll be based in Liverpool, but it's going to be largely focused on R&D for the European market. So it isn't expected to be a manufacturing site for any vehicles because they will continue to be built in China. But still, a sign of the importance of the UK for Chery.
Yeah, definitely. So I think we'll see a lot more coming out on those in due course. So, packed headlines this week. So we've had the SMMT figures for the cars and the commercial vehicles. The base rate has stayed at 3.75%. In one way, that gives us a bit of stability, I suppose. In many ways, obviously, everybody would want the base rate to fall. It depends whether you're borrowing or you're saving. But the busy week in the headlines there as well, with lots going on. So hopefully we've managed to capture the majority of what has gone on just in this week across the headlines. I'm sure we've missed something somewhere, but lots to cover there, Curtis, this week.
That was a headline busting show. It really was. We covered a lot of ground. So we hope you enjoyed that. But that's all for now. Many thanks for joining us on the Motor Trade Radio podcast. Until next time, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors and Cazoo. We'll be sharing all the URLs from this week's headlines in our newsletter on Monday morning. To subscribe, just search LinkedIn for the Motor Trade Radio podcast.